Hey there everyone, welcome back to my channel. Today, we're diving into the stock market for absolute beginners. If you've ever wondered how to start investing, what stocks really are, or how to grow your money over time, this video is for you. By the end, you'll have a solid foundation to take your first steps in the world of stock market investing. Let's get started. So let's begin with the basics. What exactly is the stock market? The stock market is a marketplace, both physical and digital, where buyers and sellers come together to trade shares of publicly listed companies. Shares, also called stocks or equities, represent partial ownership in a company. When you buy a share, you become a shareholder, which means you own a tiny piece of that business. The value of your share can go up or down depending on how the market feels about the company's performance, the economy, and many other factors. Essentially, the stock market allows you to invest in businesses you believe will grow over time and potentially share in their success. Many people turn to the stock market as a way to grow their wealth. There are a few key reasons for this. Long-term growth. Historically, stocks have provided better long-term returns than keeping money in savings accounts or under the mattress, often averaging around 7 to 10% per year, adjusted for inflation. Compound interest. Any gains you make can be reinvested, so your investment grows on top of previous returns. This is known as compounding, and it's incredibly powerful over time. Own a piece of successful companies. By investing in reputable companies, you share in their future profits and growth. Remember, the stock market does come with risks, so understanding the basics is crucial before jumping in. Before we move on, let's define a few key terms you'll come across. Stock. A share of ownership in a company. Bond. A loan to a company or government. Typically more stable but lower returns than stocks. ETF. Exchange-traded fund. A basket of stocks or bonds that you can buy like a single stock. Helps with diversification. Index fund, a type of mutual fund or ETF that tracks a specific market index, like the S&P 500. Brokerage account, an account that allows you to buy and sell investments like stocks and ETFs. Dividend, a portion of a company's profits paid to shareholders, usually quarterly. Understanding these terms will help you navigate the stock market with more confidence. Now that you have the basics, here's a step-by-step guide to getting started. You'll need a brokerage account to buy and sell stocks. Look for low fees, an easy-to-use platform, and solid customer service. Popular brokerages include, insert region-specific examples, EAG, Robinhood, TD Ameritrade, Fidelity, or eToro. Many brokerages now offer commission-free trading, which is great for beginners. Opening an account typically involves filling out an online form with your personal details. You'll then transfer money from your bank into the brokerage account. Decide how much you can afford to invest without needing it back immediately. The stock market can fluctuate, so plan to keep your money invested for the long haul. Ideally, at least 3 to 5 years. Beginners might find it easier to start with index funds or ETFs, as these spread your risk across many companies. If you want to pick individual stocks, look for companies with a strong track record, good financial health, and a business model you understand. Once you've done your research, place a buy order in your brokerage account. You can choose a market order, buys immediately at the current price, or a limit order, buys only at a specific price. Don't worry about being perfect. The most important step is just starting. Here are a few easy-to-implement strategies. Dollar cost averaging, DCA. Invest a fixed amount of money regularly, say monthly, regardless of the stock price. This way, you buy more shares when prices are low and fewer shares when prices are high, averaging out your cost. Diversification. Don't put all your money into a single stock. Spread it across different companies, industries, or even asset classes like bonds. An ETF or index fund is a simple way to diversify instantly. Long-term focus. The stock market can swing daily, weekly, or monthly. Patience is key. Historically, staying invested has yielded better returns than trying to time every up and down. Even with a good strategy, it's easy to make rookie mistakes. Panic selling, stock prices fluctuate. Selling just because the market dips can lock in losses. Chasing hot tips. Investing in something just because it's trending can be risky. Always do your own research. No emergency fund. Don't put all your cash into stocks. Keep some money aside for emergencies so you don't have to sell your investments at the wrong time. Over leveraging. Avoid using borrowed money or margin to invest if you're a beginner. This can magnify losses. Learning from these mistakes can save you a lot of stress and money in the long run. Once you're in the market, you need to maintain your investments. Periodic check-ins. Look at your portfolio every few months or quarterly. Make sure your investments still align with your goals. Rebalance. If one sector becomes too large a portion of your portfolio, consider rebalancing to maintain your desired asset mix. Stay informed. Keep an eye on major news and company updates, but avoid letting every little headline drive impulsive decisions. The key is to remain consistent, informed, and patient. And that's it for our beginner's guide to the stock market. Remember, investing is a journey, one that can help you build wealth over time if you stay disciplined and patient. If you found this video helpful, give it a thumbs up, share it with a friend, and subscribe for more personal finance and investing tips. Thanks so much for watching, and I'll catch you in the next video.